Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Well, this thing is already going right now, man. Ooh. So overnight, some of the CPI numbers overseas, particularly in Japan, much higher than expected. Very concerning. Oh, let me turn that down. And man, they are coming out of the gate and selling this pretty effing hard. I'm not sure that I'm going to be able to find a safe spot to get in here on this, so I am going to have to pass it a little bit and let's kind of get ourselves oriented here. We'll come back. Here you can see the Treasury's pushing down quite a bit. I mean, it is only about 5 basis points higher than it was yesterday. But when you come all the way back up here to the top, that's a pretty big drop. In the ES, we had a bullish day, particularly on the close, but now they are selling again off of this overnight CPI news. Oil may be poised to go higher. We'll see. We'll see. This sort of thing lately has been a negative for oil, so we might see them fall again. But maybe we don't, and we see the inflationary pressures win out in that instance, which would be a change. Gold and silver, well, they're struggling, but not as much as they have in the past on some of these down moves. So, and then we got Kappa under a little bit of pressure, but still mostly in the range going sideways. But we come over to Bitcoin. Bitcoin did recover some of the downside movement from yesterday. I would expect, though, with interest rates raising and the equity markets under pressure, that Bitcoin will probably succumb as well. And we are seeing, well, the dollar at the moment, at least, is actually looking pretty strong, interestingly enough. So we're coming back over here. So the big the issue that we got, well, so first of all, we are going to get Bank of Canada CPI numbers here in 4 minutes. All right. Also, let's see here. Building permits change. We do have some ECB speakers here. Red Book. Nothing too significant. But then after the stream, we have the 20-year bond auction. So remember that the 20-year has been one of the places where, like, the yield is like way out of whack, and there has been some demand there as well. So we got to be careful about what we're seeing here. At the moment, it looks like it is primarily the interest rates that are moving. And I would have expected to see a lot more correlation with what the Japanese yen has been doing, and I would have expected the dollar to maybe be coming down. But perhaps they think that the Japanese yen is going to continue to just be like, meh, whatever. So we'll see. We'll see. But because of that, and then we got the 20-year auction, I do think that I have to be careful about where I get in. Basically already missed the wave. Good morning, D. Which reminds me, I was doing a little bit more QA yesterday. I will be putting out a, what we call it, what, version 201. Do treasuries open when ES opens? No. Variable. So now that's interesting. You change your name because you're already a subscriber and I don't recognize the name. So you must be somebody that I already know. No, that wouldn't make sense. If you just came in and you just subscribed right off the top, I really appreciate it. The treasuries do not open at the same time that the ES opens. The treasuries open at 8:20 Eastern time. Okay, so the treasuries have been open for about 8 minutes. So when you come here and you look at this bottom chart here, and you see how like they started moving down here, right? That was when we opened. Let me do it in yellow. That is when we opened. So as soon as the treasuries opened, they started selling them pretty hard. Yeah, welcome. So that's one of the timing of when the treasuries open. That's one of the things that makes them unique to trade, because a lot of economic reports get released at 8:30 Eastern time. So basically, like, the treasuries are the only instrument in full swing at that time, and that makes them really good to trade economic news with. Looks like today is going to be a day, huh? 5-year is bouncing here. Very interesting that in this particular case, it's much more the equities and the treasuries moving in tandem rather than the Forex. Because again, it was really CPIs abroad that really kind of triggered this. And so you would think that you would see movement in the currency, but you're not. If anything, it's making the dollar stronger again. Which is I mean, it's not what I would have expected for starters, but I'd also say it's probably not very good. For learning about news, did you backtest most of everything or learn it from books? Oh man, that's a good question. And like in terms of news, because a lot of the time in the news, I can't 100%, I don't 100% understand where I learned this stuff from. I worked for a bank, and I learned a lot about that stuff when I worked for the bank, and they were always doing education courses. So I learned a lot about the economy there. I also spend a lot of time reading news. So I really think that the place that you're going to learn the most for macroeconomic fundamentals and predictors of order flow is going to be from following the current events, right? You follow this for, a decade or so, you get a pretty good idea of how the economic framework works, right? That's your most useful thing. I've never found a single book source that I felt really gave you the framework that you needed to be able to trade off of. And the big issue that I see out there is that the people that are interested in the fundamentals believe that the fundamentals are what moves the market, right? Well, the fundamentals can move the market, but they don't move the market directly, right? They move orders, and the orders are what moves the markets. Understanding that it's the orders that are what moves the markets is really paramount to understanding why the markets move, because you will see all sorts of situations where you know what the fundamentals should be and how it should be moving off of the fundamentals, and it doesn't move that way. Why? Because the orders. And if you have, so instead of calling it fundamentals, I mean, I'll call it fundamentals for lack of a better word when I'm talking to a larger audience. But when we're talking here on the stream, we talk about predictors of order flow, because that includes things that are not necessarily fundamental, but still move markets, like people's existing positions, CTA flows from different types of funds, this sort of thing. So on Zero Hedge, you'll often see them post stories about this sort of a thing with the flows, because the big Wall Street analysts, they will kind of list which flows they're expecting to see. Or rather, there are flow analysts out there, especially at Goldman Sachs, that are very good at predicting this sort of stuff, right? So that's why I don't feel like that the books quite do it for you. But I don't know. You just pick things up here and there. So this whole move, one of the big things has been that the Japanese yen, the Japanese central bank has not been raising interest rates. So to come in and see a higher than anticipated CPI is a really big deal for Japan. But the Japanese yen at current not moving kind of suggests to me that the market still thinks that they're going to stay and not move interest rates, yeah? AKA study hard and then work. Well, you don't have to work for the bank, but like I was saying, the best source that you're going to get is reading the news. I would go to all of the major news sites. Like maybe I would get a subscription to the Wall Street Journal or Bloomberg. And then I would read Zero Hedge, or even better, Zero Hedge has like $100 subscription that lets you, where they drop the Wall Street analyst reports in this Dropbox. Like that's a great, then you really learn stuff, right? And you read all of those reports, and they're boring reports. Like they're boring reports. It's hard reading, especially when you first start, right? But now I live on that stuff. I have to compare big news with times on the chart. So far, my backtesting for news is none. Yeah. Well, and the thing is that if you were to backtest for news, you would find, a lot of aberrations that didn't necessarily make sense, right? It would probably highlight situations where the market didn't do what the fundamentals suggested, right? Because the framework that we use is a little bit more complicated than that. Well, it is kind of chilling out. It kind of looks to me like they're gonna rotate around 30 here. Maybe I'm just being a baby about it, but I'm like terrified that if I go short here, that they're gonna go right back up to the top of this, like 114 even. Do you take small tick trades ever? Well, so when I'm feeling like doing something like that, I usually do it on sim, to be honest with you. So if I'm gonna risk my account, and I trade really small, I'm only risking, $20 usually. I like it that way. It's much more comfortable for me. And we've been building it up slowly. But when I'm feeling like, I could take a tick out here in the 10-year, I usually do it with the sim. The simulator here in Jigsaw is pretty accurate. But like the issue is that when I see something that's like, oh yeah, I can see in the book here, I can probably pull something out here, right? That's not enough to really give me a good expectancy, even though I can identify little trades. So the issue is that, like for instance, I bet you probably have a pretty good chance that you could catch 2 ticks here between 29 and 30. I mean, if you had put your limit order in a little bit earlier, now that I've said it, maybe it's too late, but you might be able to get there at 29, and there is a little bit of a liquidity hole at 30, which they might kind of slide back into. Okay, so let's just say, for instance, if we took that you'd be filled at 29 because they just ticked through it, right? Okay, the problem with this is that you're going for 2 ticks. If that doesn't work out and they break to new lows, right, they're going to be down at 27 just like that. So the risk reward is kind of skewed. It seems like it works really, really well most of the time, and there really is something to it. But trying to take a trade just on that, when it fails, it can kind of fail very quickly. And when you account for the slippage, it's not profitable. Does that make sense? I very much would prefer to come in and be like, okay, here's what the fundamentals. So like today, we know they're going to sell this, right? I'm a little concerned about how it could come back up to here, and I want to get a good spot. But overall today, rates are going to be increasing. It's just before the Fed meeting, and we got a bunch of CPIs and everything. Yeah, they're going to sell it. The question is, where's the right spot, right? So the reason I'm not in a trade is because they haven't given me an optimal entry based on liquidity and correlations and everything. Hey, Radoslav, thank you very much. So yeah. There's a risk because there's an auction today and everything that there might be intermittent periods of buying, and if you get ahead of yourself and kind of, you know, impulsively sell here in the 10-year or buy in the yields, you know, you could get stuck. Like that's where we'd be right now. Imagine if I had bought 575, or we'd be down 5 ticks. I wouldn't be feeling very good, would I? So I know. Okay, so in this instance, they did it, kind of. So if I had taken it at 29, not filled at 30 yet. But do you see the game they play with it? Like there's a real empirical behavior that happens there because of the market microstructure. But they busted it first. And depending on what your stop strategy, I mean, if you were doing 1-to-1, you're saying, I put my stop at 28. Depending on what your volume stop looked like, maybe you stopped out, maybe you didn't. Right? I don't know why. So this might just all be in my head, but I really got the inkling that this is gonna roar back in our face a little bit. Like I think the trade is a sell, but the market conditions that I'm seeing is that this probably defies us a little bit first. Especially since I can see counterflows. In fact, in the 5-year in particular, there's a pretty strong counterflow to this by about 4,000 contracts. And that right now, 4,000 contracts is enough to move the 5-year quite a bit, right? So even though I know enough about the daily, this is a little bit harder of a trade because normally when I get a trade, I want to really take it. It's like, I know all of the flows are going to be sells. And so I can just kind of wait for my spot and I take it. In this instance, I think that the sellers are going to win overall, but there are some counterflows that particularly the auction for the 20-year auction is a counterflow. Now, auction can be difficult to predict, I've found. 20-year auction could do well today. Could do well today, could do terribly today. If the 20-year auction does poorly today, they've been doing well. But if it does poorly today, that would be a really big problem for the market, I think. Yeah. So it's that sort of thing we got to be careful about. What's this from the Financial Times? Back booster Chamath Hypothetical throws in the towel. Did I say that right? Hypothetical? I think it did. I think that's how it says. How it's said. So now that it has chilled out a little bit, I think we probably have about 15-20 minutes before we'd want to take a trade. So TAF looking good. What are you talking? Is that a stock you're talking about? Oh, I see. So are you using my new spread version? Because I haven't gotten rid of the spread candles one, but I consolidated them. So if you go to the regular spread candle, no, sorry, if you go to the regular spread, there's an option where you can switch it between line and candle now, and you can do multiple legs. So it's a little bit different because you will have to put in negative numbers, but you can do like, you know, what do we call these? You can do barbells and stuff now. You can chart barbells and stuff now with it. And it includes all of the extra, it includes all of the, like, you know, the spread is kind of difficult to reconstruct historically. So the chart behaves differently live than it does on historical data so that you get a more accurate picture. I think I do want to add in like boxes, being able to chart boxes instead of candles, because candles on spreads kind of just tend to look funky. So maybe boxes would be better. Look at this. They came all the way back up there. Oh, 01 is as far as they went, right? Yeah, okay. So I should clear this up above us. But, man, did I call that or what? I mean, probably we should just chalk that one up to luck. But I feel like I'm starting to get good at that one. Oh yeah, no. Let's. I really don't want to take a trade right now. I'm tempted to get in at 114 even right there, but we really, if we're gonna get the kind of trade that we want, we shouldn't be seeing it going again for another 15 minutes. So I might regret saying that, but so if I come in here, I'll add a chart of the 10-year on a 1-minute basis. I come in here to indicators. Go to my speculators at the indicators. Yeah, so you can see you get a little bit more stuff now. And we go to the spread. So here you specify the number of legs. If you say like 3 legs, then you get more boxes to be able to put the other parts of the leg in there, right? And you notice that it's buy 5ZN, sell 2ZB. So I have to put a -2 in there, right? And then on the display here, I can change the chart type. So instead of line on close, I can say candles. Then I got the colors. I can also gray historical bars if I want. I won't do that in this instance. And I click OK. Okay. It's taking it a little bit to calculate because it has to load the other data series, right? That's actually taking longer than it normally would. I don't think this has anything to do with the indicator. I think that NinjaTrader is being a little funky. I'm just gonna let that sit. No, should I? I don't know. Do you hear that click, click? Was that in? Yes, it was. 900 bid at 114 even, and then it came back down. So they're doing some spoofing and messing around with it here. That's curious. Let's try this again. Let's try it with just the default. Okay, so with just the default, it pops up immediately. I don't know why it was taking so while on the candles one. I need to look into that. See if I can duplicate that. Now if I switch it to candles. Ah, there you go. Now you get candles. I think that Ninja Trader was just being dumb. So yeah, now you get it with candlesticks, right? And you can switch it between them. But you could also do a barbell if you want. I haven't really messed around with the barbells too much, but... Don't tell me they're already planning on coming down. Well, so... what I think is happening... So let's go back to kind of work from our framework, okay? What I'm looking for is meta orders. So we should see a move down, followed by some consolidation, and then they should find an area where there is lower resting liquidity and come to an equilibrium, which at so far has been 30 half, okay? But it's also likely to happen at 114 even because that's an even number, okay? This should take about 45 minutes. Then we might see another move down, okay? But what's happening is we've come back here and now we're getting people like really pushing it around. So that says to me that there are some really pushy players in this market at the moment that are kind of kicking against the pricks per se, right? Like he was spoofing there because he wants fills higher. Probably. But that's still, that kind of activity can actually contribute to the liquidity hole forming, an area of low latent liquidity forming. So that kind of ticking and everything, right? It makes you think like, oh, the big guys are doing something. I don't want to miss it, right? No, you stay away from the big orders. Or that's how I do it. I don't want to mess with the big orders. So them ticking around like that is like, okay. I don't want to mess with that because number one, I don't want to encourage them to do it. If I come in and I say, oh, there's a spoof, I want to sell it or buy it, then they're just going to start doing that to stir up liquidity for themselves, right? So we don't want to reward that activity. We just kind of stay pat. He's probably listening to me right now and he's like, God damn it, Seth. No, that's not what we want. Now he's going to do all sorts of funky things to try and screw me up. Not really, but it helps to be conspiratorial, right? Helps to be a little bit suspicious all the time. I really need to make another video. So I got here, I need to make a video about price action, the workspace, and the macro. But I also need to make a script that is just the strategy. We'll call it the part of this complete breakfast video. I think that's a really important video to make. Because anytime I come in here finding myself like explaining something over and over again, it's like there needs to be a video about it, right? The best thing I did was leave gold and ES and get back to ZN. Your heart rate and it's much better. It's definitely more comfortable. Like here's the thing. I'm not making millions of dollars doing this, okay? I'm not. Trading is really effing hard. Everybody has this expectation that if you were doing well in trading that you'd be a millionaire. That's not the case. Like really, if you were doing this right, what you're gonna make is very modest. The people that are making millions of dollars are just gambling, really. To be making those kinds of gains, you're gambling to some extent. Or maybe you were being conservative and you just got really lucky, okay? it is so much easier to learn and figure these things out when you don't have this huge pressure on you. Everyone wants to go over and trade the NASDAQ, where it's like, I'm going to make or lose $2,000 on one contract in a day. I mean, if you have the bankroll for that and you can lose that much and it doesn't mean anything to you, then heck, go for it. If you're already a millionaire, that's the way to do it. Okay? But if you're a regular person, be conservative. Just come and trade the micro yield futures and make $10 at a time. Right? It's so much better for your stress and everything. You're going to learn so much better when you can, when the risk is low enough that you can actually think, right? Well, they're having a hard time getting above 01. But I'm still, like, when I'm looking at the flows. By the way, we are seeing some pretty heavy steepening today. Be conservative. If you're new, I'm saying if you're new, listen, come in, get good, and then swing big. I probably should swing big, but I'm trying to save up for other things. I think at some point I would like more money to be able to play with stocks. But every time that I go in and try and like find the stocks that are going to move on my own, I don't necessarily find the plays that I'd like. One thing I do know, lots of YouTube videos that use ES as a sample study and seem to be in very teaching video, very unlikely they're making money in ES. Well, yeah, I really just don't think that ES... I don't know. From an order flow perspective, it's way better to use ZN as an example. Like, because everything that happens in order flow that we can prove is a thing are very, very easy to see in the 10-year treasury. Very, very difficult to see in ES. 90% certain that they're not making any dough. There are a couple of these guys. So I kind of learned it early on. Should I say learned? I mean, I didn't learn. Listen, I was always skeptical of other people streaming, or not even streaming, just other YouTube videos. So like I started doing this. I didn't do this like, oh, I'm going to become an influencer per se. Okay. Like I had a proclivity towards being a content creator. I was making like content for video games before this. And doing okay with it, but the game that I was working on didn't really work out. And so part of it was like, well, I need to go into a game that's never going to go away and is always going to be big and has lots of money behind it. Guess what game that is? The stock market, right? But it started as a contest, right? So it started as a contest, and then when the Bitcoin futures went live, I streamed that. That was the first time that I streamed, and that was like thousands of people. And then so many people kept coming back. Of course, this is what we get now on our usual day, like 4,000, going from 4,000 people to like a dozen or so that we get a day is a big difference, right? But you keep coming, so I'm gonna keep streaming. And I didn't have everything figured out back then, and I never said that I did, but I just taught what I knew. But I was really the first one. Maybe there's somebody else that I don't know about, but nobody else was streaming as early as I was. And early on, there was this, who was it? Oh, it was Patrick Wayland. It was Wayland. You know that guy on YouTube? And he never streamed, but he was always posting videos. And he would have some crazy video like every day. And I'm like, there's no way he's using sim accounts and like doing this like 20 times a day until he makes it big on one of them, right? So I've because of that, I've always been like, when I see other content creators, I always automatically assume they're full of shit, right? like the thing is when you look at what I share on the channel, right? I don't come in and I say, here's this strategy that's going to make you an 80% win rate. That's a big one you'll see in thumbnails these days. It has an 80% win rate or what. I don't tell you that stuff, right? The things that I'm telling you are like proven are actually very, very measured. And to some extent, I'm kind of trying to help you put the puzzle pieces together yourself without explicitly telling you everything. What does the spread help you with? Asks Trading Bunny. Okay, so this is a really important thing that people miss. Yes, and this is what I got to cover in this video. I need to make one that's like a part of this complete breakfast. So keep in mind, so I'm primarily an order flow trader, or at least that's been my specialty. Okay, order flow is only part of a complete trading strategy, just like cereal is only part of a complete breakfast. Except for that cereal isn't really very good for your breakfast. So that's maybe cereal is more like technical analysis. and order flow is something more substantial, like steel cut grits or something like that. But it's only part of the complete trading strategy. What are the other parts that you need? And you're going to need predictors of order flow, which is kind of like fundamentals, right? You're going to need risk management, okay? And you're going to need to be able to watch correlated instruments, okay? So especially when we're watching here in the treasuries, the correlated instruments are a more significant part of why the treasuries move than almost anything else, okay? So number one, if I see this tick up, if I see the 10-year tick up, I'm almost certainly going to see the 5 and the 30 tick up too, right? If they don't, then the 10-year is probably going to tick back down, right? But if I see a move, they're all going to move together to some extent, right? But one side is going to move more than the other. So what we're seeing right now, if I can, it's kind of been reverting back. So do you see here? Look at where. Okay, so the 5, I have things lined up so that the 5 and 10 are at the same place. But look at where the lows are, right? The 5-year came down a little bit more than the 10-year, right? So when it's going this way, when it's pointing down, to the side and down, that's flattening. And when it's to the side and up, that's steepening. Now, since we've started, it's been flattening. But if we go and we look at the pre-market action, it was steepening. So what does that mean? Okay. So again, going like this. So what does that mean? It means you sell the 5 and you buy the 10, or you sell the 5 and you buy the 30, for instance, right? That's what the spread means. Okay. Just look at the direction of the line. This is why I have it. 5 is over here. This is 5, 10, and 30. And then when I do it on the micros, I do it the opposite way. I do it 5, 10, and 30. Because what I want to see is these lines. Is it steepening or is it flattening? Okay. So we have been steepening though. Okay. So what that means, if I come in here and I see a really strong iceberg on the bid in the 5-year, for instance, okay, that normally that would be like, oh man, that's a really big iceberg on the bid in the 5-year. That's going to stop price, right? That's going to cause them to reverse. Well, not so fast, because it's in the 5-year. And overall, for the session, we've been steepening. So I should expect to see people buying the 5 and selling the 10 and the 30, right? If we continue to see steepening, then what I should expect to see is the 30-year lead us lower and kind of drag the 5-year with it. So if I see like really big icebergs on the 5-year, I have to ignore those, right? If I was seeing it in the 30 and we were steepening, then I'm going to react differently, right? So you understanding which direction the spread is going in the treasuries is very, very important to being able to read the order flow, because you are going to see icebergs or places where, it just ticks on very little volume that aren't going to make sense unless you understand which way the spread is going. Does that make sense? Okay, so to a more advanced perspective, I'm also going to pay attention to how the treasuries react to what is going on in the Japanese yen and what is going on in the dollar overall. So the treasuries and the 6J are very highly correlated. Okay. Remember that the 6J is the opposite of JPY USD, right? 6J is really USD JPY, but the 6J futures is what I watch because we're on the CMA. If the 6J were to make a really strong move up right now, you would probably see the treasury futures moving up with it, right? And when that happens, it's very often the case that there's not as much order flow in the treasury. So you'll see it'll move up and you'll never see it print more than 500 moving up, at least with current liquidity. You know, we come all the way, we break new highs and never do you see a print over 1,000 that whole way, right? What's going on? How is it we're trading thousands down here and we're not hardly going anywhere? And now all of a sudden, the market makers don't want to hold price at all. They just get out of the way. Well, what's happening is the market makers are adjusting their bids and offers based on the currency correlations. Okay. So I have to contextualize that into the order flow. Once again, you know, because normally I would be like, oh, it ticked up, but it was only on 250. So I don't know if that really means anything. But then I come over and I look over here at the 6J and I go, oh, well, it looks like the 6J is on the move. I have a reason to think that the 6J would be on the move. So actually I do want to give heed to that and I might be able to catch a good trend with that. Right. And so that's another kind of correlation that you can see. And you can chart these sorts of things, right? I could chart the 10-year treasury against the 6J if I wanted to. I don't have one of those up. I have, you know, this is kind of, it is like a spread to some extent. The dollar index. The dollar index is really what it is it's like it's like 6E times some small decimal number plus, you know, it's a spread with each leg being just a different currency. Is how they calculate the dollar index, right? So I have an indicator that synthetically calculates what the dollar index is because the dollar index trades on the ICE exchange, so you don't get data for it if you're trading on the CME. So how do you know what the dollar is doing? So we calculate it ourselves, what the dollar index should be in current conditions, right? So that's how the spreads help you with your trading. Okay, Mustafa, I still feel that I need to know how to decide an entry and exit. What should I look for? Okay, so the way that I entry is first, I need to have a predictor of order flow. So this one is happening too soon. But I will go back through and let's just assume that we took a short, okay? Because what am I saying is the predictor of order flow today? There was CPIs overseas that were really aggressive. And we have a Federal Reserve meeting tomorrow. So markets are trying to protect themselves against interest rates rising. And that's why you're seeing the S&P 500 selling and the Treasuries selling. Okay. So from that alone, I'm looking for a sell, right? So how do I pick a spot? Okay. Well, one thing that you can do, just really, really simple, is just wait for a pullback. Yeah. Now, the problem with that one is that maybe the pullback never comes, right? But what I am looking for, generally speaking, is an area of low latent liquidity where things kind of like chill out, right? So you saw it here on this move. We moved down. What happened? We came back. We traded a bunch of volume here at 30.5. We traded a bunch of volume at 114. Now it looks like they're moving back down. Maybe they might snap back up to here though. It hasn't quite been long enough for those holes to heal, I don't think. But it does look like they're a little impatient today. So maybe they do just go. Okay. But those areas of low resting liquidity, here's what happens is what you see on the resting liquidity, right, isn't the full picture. people wait until it gets to their price and then they put the orders out, right? But what you'll see is you see this area where, like, you know, it goes bid, they only put 200 up. It goes offer, they only put 200 up. Less than 500 at least in the 10-year, right? Right now, I wouldn't say that that's too bad. But you'll see it'll go back and forth across that, and it just can't go anywhere, right? And then if they try and break out of that and say 200 trade into this, it just gets absorbed, right? So you run into a situation where the limit orders in the middle, there aren't very many limit orders in the middle, but there are lots of limit orders on the side. And so price will tend to fall back into that hole over and over again, okay? This was shown, or where we get that is a study about Walrasian auctions. I can pull that up. If you ask a question about that, I can pull that study up for you later, okay? But there's liquidity holes, okay? Now here's the key thing that they don't tell you in the research that I know, okay? That don't tell anybody else this, okay? But banks will intentionally create liquidity holes because when price gets stuck in that range, yeah, there's not very much latent liquidity there, but price stays in that location for so long that in the end, you can actually transact more volume in that spot than you could otherwise. So what the block sellers will do is they will sell really hard to create one of those holes, kind of back off a little bit, and then just trickle volume into that hole. That's why these end up being the points of control usually. In the end, these end up being point of control. It's because you can transact more volume there, okay? So that makes those locations really good places to try and base your trades around, okay? So number one, because we will get this range. So I know, you know, probably the best price I could get right now is 114 even, right? I was from 114. I have a pretty good spot within the range to have been short, right? But the other part of it is that it takes time for this hole to heal, right? And they're going to play it for all it's worth. So they're likely to be stuck in that hole for about 45 minutes. Now it's been about 45 minutes. So now we could see another move now at this point, right? And see now that they're kind of going, I could try 3.57 perhaps. I was really feeling good about it. I don't know if I'm seeing enough pressure to justify an as she goes trades. Okay. Now it works on the other side too, right? If I have a long, I was long here in the micros, okay, and then the treasuries are selling down here, and then I see really big absorption at some spot, okay? It's very often in the treasuries that they will extend a little bit lower, but then I want to take it off because they're going to snap right back to where that big transaction was, where the liquidity hole is forming, right? So they become really good locations to base your trades around. Does that make sense? Was that is explaining now is sold with a course that costs hundreds of dollars? Wow. I think at some point I will write a book, and this will be some of the stuff that will be in the book, but it'll maybe be like 350. That's what I sell for, and I'll have a lot more than that in it. Like if I write a book, it's gonna be a big daddy book. You know, like these books. Maybe it could be like this size. Maybe it could be this size. But I would much rather have a book that's like, you know what I mean? Okay, what makes them choose a certain place to, so they don't choose the place. It just kind of happens. One thing that does make a liquidity hole more likely to form in a location is if it's an even number, because people like to put their liquidity at these even numbers. I shouldn't call it an even number, a round number is I think the proper term. So like 114 even is a round number. Half of that, 16, is a round number in the treasury. In the equity indexes, you know, it's going to be like every 5 and 10, right? So like 38.85, notice how that's 38.85 is exactly where they started. They've done lots of studies on this, and people tend to place their liquidity at round numbers. And so the algorithms tend to place their liquidity at round numbers. So round number could be something that is likely to. So if we're kind of like, you start to see a liquidity hole forming, but we're really close to the round number, it might be a good idea to wait because it's likely that they will settle at the round number, right? But really what causes this is what we call the square root law. So the square root law is that if you have a meta order of size Q, what will be the impact that we'll have on the market in a daily basis? And the rough formula is Y, which is a constant that is different for each asset, but tends to be between 0.5 and 1. 0.5 to 1, okay? Times the volatility times the square root of Q over V. Q is the size of the meta order, and V is the amount of volume during that day. So if you graph that out, it looks like this. So it's kind of interesting because it kind of says at first your meta order will have linear impact, but as the size of that increases, the impact on it actually decreases, right? So you like double the volume that you're trading, it doesn't double the length of the move, right? And so that's kind of what governs that liquidity hole, right? So the liquidity hole is basically when it's getting to this asymptote here, right? Where the orders aren't having as much impact anymore, right? And the way that you'll see it on the DOM is low resting liquidity. So like right there at 28.5, it's relatively low resting liquidity. But what I want to see is like low resting liquidity tick after tick after tick. Like it ticks down, low resting liquidity, ticks up, low resting liquidity, and it does that and goes back and forth for several minutes. Okay, so see that tick down, 500 followed it. You're not really getting that right now. Okay, they're ready to move. It looks like they're gonna go and make a new low. Okay. But you will also see it form from a really large transaction taking place, right? Big iceberg happens in a spot, and or just a bunch of volume trades really quickly, right? The other thing that will cause it is like, say we're sitting here and let's say something good happened, okay? So we're moving down right now. And that was a pretty good excursion onto the downside, right? So this liquidity behind that is probably a little bit damaged going all the way up to 114. So if something came out that was bullish for treasuries that caused us to move up, they're going to cross through that area with the low liquidity very easily, like a hot knife through butter, right? But then it takes time for the orders to stack up behind it. So it will tend to suck it back down after that, right? So there's a really clear instance of a liquidity hole. When you get news, liquidity holes are kind of why it'll like pop and then it will like pull back really hard. Sometimes all the way back to where it started, right? Like, especially if it's the sort of news where it's like a lot of people traded it, but there's a limit to how far it's going to go. Like nobody thinks that it's a trend day. Then when all of the traders that bought the news take profits, right, could move it all the way down back to where it started, right? So they don't choose the place. It's a natural consequence of a certain amount of volume having traded. Does that make sense? Although there a lot of volume trading in a spot, or there being a spot where there's just no resting liquidity, makes it more likely to form in that location. Yeah. So I guess I need some sort of volatility trade. That's why I'm trading equities. Well, I mean, we're getting decent volatility in the treasuries, though. Friday is one of the largest expirations for puts in the billions. That's okay. So there is the push lower. I guess I could have taken 5-7. So a liquidity hole can be an imbalance of orders. Yeah, I would kind of. I mean, a liquidity hole is an imbalance in liquidity, right? It's basically a liquidity hole is the place where the market orders overwhelm the limit orders and basically run out of volume to trade against, right? So when I say wall region auction is a really great way to think of it. Is like a wall region auction is where you say like put all of your limit order. You can only put in limit orders. Put in all of your orders, and then at the end of 5 minutes, we will match your orders up, right? So a bunch of people will sell, and a bunch of people will buy, and somewhere in the middle is where the people get matched, right? So now we do the auction again, okay? The people that get filled, they're not going to put new orders in. So if we only had the people that had orders in before, then there's going to be something like this now. It's going to look something like the liquidity is going to look something like this. There's a hole in the middle. That's the liquidity hole, right? And if you do that 5 minutes, now you say, let's only do it every 1 minute, every 30 seconds, every 1 second until it's a continuous auction. And when you do the math on that, making it a continuous auction, that's where this square root comes from. That's what creates the square root. Yeah. Now that I've explained it to you, you'll see it every day. You'll start to see the market as move, liquidity hole, move, liquidity hole. Oh, move the other way. So if there's a move the other way, the liquidity behind it is still damaged, it's going to move further. Liquidity hole. Right? Once you see it, all of a sudden you're like, oh yeah. There's all these times where I was seeing this and I was seeing this, and like it doesn't matter because they're in the liquidity hole. It's not going to go anywhere. Why am I taking a trade? I can wait and try and time it. Like here, if we had waited, I didn't take the trade because I guess I was too busy yapping or something, but right? That would have been way better than if you had taken it 20 minutes earlier, right? You would have gotten the same price, but you wouldn't have waited around as long. Right? Because we knew where the liquidity hole was, we kind of knew how to time it. Although they were a little impatient. I was kind of hoping that I'd get 114 even at the time that I wanted. But they are being impatient. They want to sell it today. How high does the 10-year get today? Well, I don't have to be so another. Okay, do you see that volume that just traded right there? So that's a sign that we might get a liquidity hole here. Now, something you got to watch for. Don't be like, okay, there's a liquidity hole, I want to buy there and try and, take the iceberg and reverse it. I mean, sometimes that works out, but that's not really a profitable trade. What I would do is I would just wait now. Now I would say, okay, timer starts 45 minutes from now, maybe I take a trade. 45 minutes from now, maybe I take a trade. Something that often happens is you'll form a liquidity hole at her 27, but there is just a lot of volume out there and they just push further. Or maybe this is like the last leg of them. Right? Like if that's the last leg of the meta order, they'll just sell the rest of it through. And so you'll get this thing where you'll get a big extension stop run to the downside and then it snaps back to 27. So if I see that, I love to take that one. That's a trade I've taken many, many times. Yeah, 67, that's a lot. That's like the biggest iceberg we've seen today, right? But look, they're going to push through. So probably might be that setup. Although today sure does look like a trend day, don't it? Today sure does look like a trend day, doesn't it? I would have thought they would have been able to get a little bit further than 26. But now you're getting an iceberg there in the 5-year. But it I don't know. The spread is a little bit in between enough that I don't know if I can read too much into that. Like there has been some steepening, but it's starting to flatten again. I think I'm gonna say that iceberg there probably won't stop them, but it could become a location that we snap back to. Although it sure has been slow since that big transaction happened, hasn't it? Well, I feel kind of bad because I really should have taken... Could I have gotten 3.55? No. I think the best I could have gotten was 3.6. But that still would have been a $25 trade. So I think I kind of regret being too picky. On a day like today, the mistake I always make is being too picky and missing out. But you know what? We got FOMC tomorrow. We got probably gonna have some big action in the end of the week and maybe next week too, probably. So I don't necessarily have to be coming in and taking big trades today. Today is a good day to focus on you guys a little bit, yeah. So this is teamwork. Sometimes the teamwork is Seth doesn't take a trade. Do you use Jigsaw for the DOM features only? Right now, basically, yeah. Their charts are okay, but they're still missing a couple of things. Like I said, like correlated assets and the spreads and stuff, those are all really, really important things to me, and Jigsaw doesn't have those yet. So I use NinjaTrader for the charts. I'm actually using the free version of NinjaTrader right now. Because I'm a Ninja ecosystem developer, they give me a full version of NinjaTrader, but I want to use rhythmic data, and my full license doesn't give me rhythmic data, so I've been using the free license of NinjaTrader to do rhythmic data with, which is fine. And since I'm using the bridge, I can pull up the Jigsaw charts if I want. I just haven't really been bothering with them too much. Although certainly if you were just starting out and that wasn't an option for you, if you had to just use the Jigsaw charts, you would probably be okay, right? How do you get that? But what do you mean? What is that? So like my synthetic dollar index and my spread charts and stuff, those are all the indicators I sell at speculatorseth.com. So I made them myself. Oh, how do you get the developer license? There's a whole process that you have to go through. Well, no, Uzi. So I'm not using the bridge. I'm using Rhythmic Trader Pro, right? So that allows me to be able to use both Jigsaw or both NinjaTrader 8 and the Jigsaw charts. I know, right? It's kind of sucks that they don't work with the bridge, but I understand why. There's some technical reasons why it would be a lot of work to make it work with the charts that I don't think they would really benefit from. So It's not just to try and convince you to use Jigsaw solely, but oh yeah, that's a big order at 25, isn't it? You notice they've continued to push here since they traded that big order at 27, but it's been a lot harder. It's been a lot slower. So I'm interested to see what happens after 25. There probably is going to be a little bit of gravity pulling them back towards 27. But the order flow has been strong enough here on this last leg of the trade that, you know, they could trend all day on that. Yep. The market ear tweets inflation can continue longer than you can remain sane and solvent. The last time we saw inflation, it was the Great Inflation. It lasted from 1965 to 1982 before it was finally brought under control. He's made, okay, so here's the S&P 500 starting. I love that we have that sound now because I would always forget. So many people think that we're going to turn into, you know, buy the dip, here comes the liquidity sort of market, like right away after we go into a recession. And I'm thinking, no, because there's reasons why inflation are happening. And until that's resolved and supply is able to catch up, you're still going to have, inflation is still going to have a problem. So you could have something like you have a recession, but then inflation is still a problem in the recession. And so they still have to keep interest rates high. And that could go on for decades. So I'm not going to be the one sitting out here getting too anxious to buy things. And just, you know, don't touch my stock portfolio and hope for the best with everything else. Because when it's inflation, there's nowhere to hide. Oh, there's nowhere to hide. It's gotta really suck to be a fund manager right now, man. Yeah, they're shying away from the 25 a little bit, but I do think they want to trade it. Do you think that the bid there is sucking in buyers? Yeah, well, the 30-year flipped back there really hard. I'm wondering if we were to continue through here. I think that at the moment we probably are likely to get a short-term pullback. But if we did get dragged lower, the order flows right now are kind of suggesting that you'll get a flattener, and that the 30-year will flatten things considerably, because the 30-year just bought. It is almost at its highest in cumulative delta now. Let's see here. Ford shares fall 5.6% at open after warning on added costs. Should we pull up Ford? I think so. Where is my Apple chart? Apple. Instead of Apple, I think I have Ford. I think I have Ford. I do. Whoa. Okay, just a couple of fast ticks in the treasury is nothing too important. I'm gonna pull up the Ford chart as well. Okay. What was the headline? What they warned on what now? or Plunges on added costs. So we'll keep an eye on them. Oh, I don't have my advanced cumulative delta on this chart. We definitely want that. I'll give it a 5-second window. I wonder what all the fund managers tell to the people for their 401k accounts. Well, it would, for them, it's no big deal, but right, like the hedge funds and stuff. If you're underperforming on a hedge fund, I don't know if there really is anything you can tell them. Because how do you justify your existence if you don't perform in the very moment that people are investing in you? Right? Like the whole point of being in the hedge fund is so that when the market gets creamed like this, you're able to protect some of your portfolio. If the hedge fund doesn't accomplish that, what are they there for? Well, it's pretty aggressive there in Ford, ain't it? Look at it's just sell. And you're just selling through everything that they're putting there. Wonder if they should be selling here. Or the volume I should be seeing should be a sell. I wonder if I've got a problem in here. I want to check something real quick. Well, I've seen that contrary flow many times before. Okay, that was this bar is doing the right thing. I think it is doing the right thing. If the price is greater than or equal to the ask, then you add volume, and if it is less than or equal to the bid, then you subtract volume. Yeah. Ask bid. Yep. No, I have it correct. I think what I was just seeing was the previous bar. It looks like there was on the open there. Well, this bar right here, a little bit of buy-in. But now that they're getting going, it's selling. It is evening back out. So look right there. There's a bunch of selling into 13.8 or 13 I'm all in futures mode. A bit absorbing at 13.84. So there is some passive buying going in here at the moment. I think that the index is probably being more out of a dominant factor at the moment. What it looks like to me. The treasuries, they are able to get back to the 27th. So I think that we were able to identify that liquidity hole really, really well. But they are hanging out more on the bottom end of that range, aren't they? But do you believe in the liquidity hole now? Like I was able to identify the spot that it was going to happen almost immediately, right? Because of the iceberg in that instance. And ever since that iceberg, it's been kind of tough and choppy in the 10-year. A little bit of an offer there. Whatever Seth's next move is, a YOLO on performance account, call it. Short Ford? I mean, that looks like a short to me. 13.75, let's say. 5 cents. Yeah, there. And now that's interesting. It looks like Ford actually kind of went first a little bit before these went, but the treasuries moved with them. Hmm. So the robots are trading the equities and the treasuries in a positive correlation. Would be really cool to know if it was really passive buying or if it was shorts covering. Yeah. Well, especially for stocks, there'd really be no way to know, right? Like in futures, most of the volume is short term, but for stocks, because it's all long term and stuff and everything, it would be really hard to sort that puzzle out. Same with like how much is short covering and stuff. They did skip a price there at 13.67. And look at that, 3.59. I do think it's been long enough. I do this sometimes where I know which direction it's going to go and I'm just too afraid to get in. Like even right here, I'm a little scared of this. Even though it looks like 3.59 would have been okay. Japanese yen fell back down to the lows there too, by the way. So the yen did eventually come along, and gold is selling off, and oil is selling off. What's not selling off? Wheat and corn. Wheat's up 2.65%, but they got hammered yesterday in wheat, so I don't know if that really tells you a whole lot. Biggest loser right now, silver down 2.48%. This seller is a really big baller. I think that the indexes are gonna get crushed here today. I mean, keep in mind that a lot of this is still a retracement of yesterday's bullishness, right? Like, for equities, things don't really get dire until 38.50. But with the way that Ford is moving right now, I think it's possible we get that. Hmm. They're kind of still showing this proclivity to come back up into the liquidity hole, aren't they? So I'm a little bit worried about it now because the flow that I'm seeing on this leg is not consistent with a large meta order selling in the treasuries to me. I think that you're getting currency correlations and stuff are moving them. It's not quite the same thing, and because of that, they keep ranging back into this area. It's making it really hard to pick a good spot. Well, there was some big absorption there in Ford around 13.65. And look, there's a big old fatty order just stacked at 13.67. Oh, did it pull? No, they traded it. Hmm. The way that the Jigsaw DOM is showing that doesn't seem right because they're saying that the 41. Do I have these backwards or something? I might have these backwards. Hold on a second. Current trades at ask. Oh, Maybe not. Well, I'll leave it like that. Maybe it was a spoof and they flipped it around the other way. I don't know. The Treasury is still holding up here, though. I don't know if that's good enough for like a really strong pullback to the 30 area or not. Board is pretty. So did you see they fell through there and there's all sorts of offers waiting to pick it back up when they tried to shove back up. There is some well, the ES is turning back up at least. See what happens there with like 13.6. Yeah. No. Order flow in stocks can be really hard to read because it just changes so fast, yeah? Like what I'm noticing with stocks is that the market orders shift very quickly. You can send me a pic on Discord, let me see. Yeah, you're getting some options activity in there. A little bit after the open. Is that in ZN? Yeah. Probably somebody hedging themselves, right? Yes, kind of looks like they're trying to dig it out, but but Ford is still like, ugh. Fed is now expected to keep raising rates and then hold them there, says CNBC survey. The Wall Street finally looks to be embracing the idea that the Federal Reserve will hike rates into restrictive territory and stay at that high rate for a substantial period. That is, the Fed will hike and hold, not hike and cut as many in the markets had been forecasting. The September CNBC Fed survey shows that the average respondent believes the Fed will hike 75 basis points at Wednesday's meeting, bringing the federal funds rate to 3.1%. The central bank is forecast to keep hiking until the rate peaks in March 2023 at 4.26. The new peak rate forecast represents a nearly 40 basis point increase from the July survey. Respondents, on average, forecast that the Fed will remain at that peak rate for nearly 11 months, reflecting a range of views. Those who say the Fed will maintain its peak rate for as little as 3 months to those who will say it will hold it there for up to 2 years. The Fed has finally realized the seriousness of the inflation problem and has pivoted to messaging a positive real policy rate for an extended period of time, John Riding, chief economic advisor at Briand Capital, wrote in response to the survey. Riding sees a potential need for the Fed to hike as high as 5% from the current range of 2.25% to 2.5%. At the same time, there is growing concern among the 35 respondents, including economists, fund managers, and strategists, that the Fed will overdo its tightening and cause a recession, of course. I'm fearing they are on the cusp of going overboard with aggressiveness of their tightening, both in terms of size and the hikes, along with and the speed at which they are doing so. Peter Bouchvar, chief investment officer at Blakely Financial Group, wrote in response to the survey. It's still kind of, well, it's kind of, the hole is really more at 26 now, but it's still kind of struggling there in the 10-year. Bouchvar has been amongst those who have urged the Fed to pivot and tighten monetary policy early on and delay that many say has created the need for officials to move quickly now. Respondents put the recession probability in the US over the next 12 months at 52%, little change from the July survey that compares with 72% probability for Europe. In the US, 57% believe the Fed will tighten too much and cause a recession, while 26% say it will tighten just enough and cause only a modest slowdown, a 5-point drop from July. Jim Paulson, chief investment strat at the Luther Group, is among the few optimists. He says the Fed has a real chance at a soft landing because the lagged effects of its tightening to date will reduce inflation, but that has provided it doesn't hike too far. All the Fed has to do is enjoy a soft landing is to stand down after raising the funds rate to 3.25%, allow real GDP growth to remain positive, and take all the credit as inflation declines while real growth persists, Paulson wrote. The bigger problem is that most respondents do not see the Fed succeeding at hitting its 2% inflation target for several years. Respondents forecast the consumer price index will end the year at a 6.8% year-over-year rate, down from the current level of 8.3, and fall further to 3.6 in 2023. Only in 2024 does a majority forecast the Fed will hit its target. That seems about right to me. Elsewhere in the survey, more than 80% of respondents said they made no change to their inflation forecast for this year or next as a result of the Inflation Reduction Act. Let me read that again. Elsewhere in the survey, more than 80% of respondents said they made no change to their inflation forecasts for this year or the next as a result of the Inflation Reduction Act. In the meantime, stocks look to be in a very difficult spot. Respondents marked their average 2022 outlook for the S&P 500 for the sixth straight survey. They now see a large cap index ending at 3,953, which is actually a little bit higher from Monday's close. The index is expected to rise to 4310 by the end of 2023. Well, that's a little optimistic to me. At the same time, most believe markets are more reasonably priced than they were during most of the COVID pandemic. About half say stock prices are too high relative to the outlook for earnings and the economy, and half say they are too low or just about right. During the pandemic, at least 70% of respondents said stock prices were too high in nearly every survey. The CNBC risk-reward ratio, which gauges the probability of a 10% upside minus downside correction in the next 6 months, is closer to the neutral zone at -5. It has been -9 to 14 for most of the past year. The U.S. economy is seen running at stall speed this year and next, with just 0.5% growth forecast in 2022, and little improvement expected for 2023, where the average GDP forecast is just 1.1%. That means at least 2 years of below-trend growth is now the most likely case. Mark Zendi, chief economist at Moody's Analytic, wrote, "There are many potential scenarios for the economic outlook, but under any scenario, the economy will struggle over the next 12 to 18 months. The unemployment rate, now at 3.7, is seen rising to 4.4% next year, while still low by historical standards. It is rare for the employment rate to rise by 1 percentage point outside of a recession." Let me come in here and start the music again. Most economists said the US is not in a recession right now. So that was an interesting survey. The market is coming around, although with some of the numbers that they were putting out there, that kind of sounds to me like that the market will be pretty happy to stay in the 3.5 to 4% range for quite some time. And that's a big range, but I guess I'm just saying Seth is going to want to get too excited and think that we're going to get volatility like this again. Might not be that anymore. Look at this trend though, man. Whew. Oh, she's gonna give me a baby, isn't she? He has a baby. It's a sleeping baby, that helps. Shh. Don't be too loud, guys. The baby is asleep. We've got really nice low-key music for it too. even though the treasuries are doing a little bit better now, although I don't know if they could still plunge down to new lows here any second. Ford is just a dumpster fire, man. Look at that thing. Do you see that big order at 26.5 in the 10-year? That looks suspicious to me. We've seen big orders like that in a couple of places, but that one does not make much sense at all. Well, I didn't quite catch it there. Did they pull? I said it was at 26.5, right? So we did get through it. I don't see anything having traded there, so I do think that it did pull. Yeah, Trading Bunny, no BS. Day trading was like the first course that I ever took. I think that the beginner's course is a really good value. You know, I'm teaching a lot of things that go beyond, because what I'm doing is really more speculation. The issue is that markets are more statistically efficient than they are informationally efficient. So what no BS trading teaches you, it's real stuff, but it's probably not as useful now as it was 10 years ago, unfortunately. But I still think that beginner's course is an absolute must read. So nothing else really lays down the game for you quite the same. And I mean, the patterns that he talks about in that book, they are real patterns. Like, those are the only ways that it can go. And once when you have like predictors of order flow and you understand the context around things, right? Then you can make calls on that a little bit better. Just be really careful about, because what I did, so I read that and I was like, okay, every time that I see this signal, I'm gonna go long or whatever it is I think that I should be doing, and didn't work. So Depai is saying all the projections for the indexes are only for generating headlines. I don't think that they're completely useless. I don't think that they're going to be an accurate measure of where the equity indexes are going to go, but it is very important to understand how market psychology is shifting. And it seems to me that while the market sentiment is still very negative, that the market overall has a much more realistic view of where things are at. Yeah. So we're continuing to see really excessive buying in the 30-year. And some flattening as a result. But do you see, like, look at my curve right now. This is a little unusual. So this volume in the 30-year is an unusual aberration that could suggest that we're going to pull back significantly. Well, I guess we've already pulled back significantly. Still thinking back at the 710 or so, I really should have gotten in, and I didn't, because I was like, well, I still want the higher end of the range, but that was too picky. Like, there was more than enough room in there for me to take it. Noticed William Shatner has been tweeting more these days. Man. So when we're looking at the deltas and so forth in Ford, does look like people are buying this dip. Would be really careful about, does the deltas, how correlated should they be with price? Seems like in stocks they can be very disconnected because of the way the index moves and everything. But it does kind of seem to me like there's dip buyers in Ford, doesn't it? Hey Oceanic, how's it going? The treasuries have pulled back significantly. Equity indexes are still struggling, but maybe they're turning it right now. So yeah, Oceanic, as long as if you want to sim trade, it doesn't matter how much is in your margin account, right? Just realize that, like, oh, I want to practice 6 months of practice. Oh, I gotcha. Yeah. No, that would be fine. Like if you went in and you funded $400 and that would keep you going for 8 months. And all that will happen is if you try to put an order in, it will reject you. Yeah, the first month's pure. I think that's a good approach. But you've been around longer than that, haven't you, Oceanic? This wouldn't be your first rodeo. Well, this is a little bit more the pullback that I was like, oh yeah, we get in here. But now that it's here, I don't like it. That countering order flow in the 30-year really has me spooked. In fact, I think it's enough that I could probably justify going long from 29. Like, I'm thinking 29 to 114 even. I think the only flow, okay, so the big buy side flow that I would expect to see today would be from the 20-year auction. Now, the general tendency that we see around auctions is that they sell going into the auction and then they buy afterwards, but that overall on auction days, the treasury markets tend to buy. But it's a 20-year auction. Where we're seeing the action is in the 30-year. So is that significant? Well, the 30-year is more like closer to a 20. So the flow that we're seeing here in the 30-year buying, it could be related to the 20-year auction, couldn't it? I think that that's a little bit too fuzzy for me to base a trade on. So I think that I will continue to play it safe. But I do think that the order flow that we're seeing is enough to say that this is probably not a trend down day. There is a countering flow that we have to be cautious about and factor into our trading here. I don't know if that means that I go long, but I'm definitely more wary about going, oh, this is a good price, I'll take this one now, you know? In fact, one of the issues is that we had this move that kind of went from 7 to 7:30. And now it's been about 45 minutes later. We're starting to get a meta order going the other way. If I start to see the buying come into the 10-year, that could really spike. In fact, I wouldn't be surprised to see 114.02. So if that gives you any kind of idea of how cautious I think we should be here. Now on the stock side, the S&P 500 has pulled back and based a little bit. So from a charting perspective, it sure does look like, you know, you could be having a move up. The activity has come down way big time, right? The activity is down way big time. And the deltas still look positive. So I think it's a really hard one to play in Ford. I mean, I think this is outside of my expertise. Well, what I'm seeing in the order flow in Ford suggests that you buy it here. In fact, what I'm seeing overall kind of suggests that the equity indexes might have a big recovery here and might move back up to at least the opening prices, if not extend a little bit above that. Beth Williams Lou being retweeted by Bloomberg Crypto says Michael Saylor's MicroStrategy is the largest corporate buyer of Bitcoin, and it just announced that it bought some more, but it was MicroStrategy's smallest purchase of the cryptocurrency in more than 2 years. Make of that what you will. Still waiting for you to drop your book. I really do need to get in on it. I think I will have some time here in the holidays. I'm going to start taking some days off. Maybe I should take tomorrow off. Maybe as a Fed meeting. Probably more better to take Friday off though. But because I need to work on this test. That is kind of holding me up from doing other things. Writing is hard. I find writing difficult. I always want to get it absolutely perfect, and it's really hard to get like I know what I want to say, but getting the exact words to say it is really difficult sometimes. Although, here's the thing. Every time that I put a video out, that's some of the work, because basically what I'm going to do is I'm going to take those scripts and I'm just going to expand them. There, they took 29 bid. There's 29.5. This is definitely, the momentum has definitely shifted, and the order flow in the 10-year does look auto-correlated to the upside, although it's maybe, well, it's maybe 7,000 contracts long. Well, I guess from the lows, it's about 10,000 contracts. The lows in cumulative delta, at least. It's interesting that the big old orders that we saw at 26 did end up reversing things. I think one of the mistakes that I would make very early on is I would see something like that. I'd see a large order like 26 and be like, okay, that's my signal to get in. Well, the order flow did give you a good read on which direction it was going to go, but it took a little bit of time for it to do that, right? The UK's financial regulator has warned consumers against dealing with FTX, the cryptocurrency exchange run by billionaire Sam Bankman-Fried, in the latest clash between British authorities and offshore digital asset companies. How is Bitcoin handling all this today? Well, they've been selling in sympathy, but they're not back to yesterday's lows. I said long 29, right? Let's just check. I'm just kind of trying to get an idea of how good my feel is here. I think when I look at the yields here, okay, if I took a short and made it to 55, so if I had to make 20 bucks, probably we would have to be, okay, not quite to the highs, but probably above 114. To give you an idea of how big of a move that's expecting a lot. Uh-oh, The Hill says new evidence shows the GOP's Trump problem is getting worse. Republicans are growing more concerned that President Trump could be a drag and not a help in tight midterm races. Yes, I agree. Trump remains overwhelmingly popular among Republican voters, but he's just as unpopular with Democrats, and there is a growing body of evidence he is losing more support from independent swing voters as he grapples with a slew of investigations. Well, I don't, I'm not too concerned with all of the investigations, but I feel like that his behavior and what he's saying has been getting more erratic and is a bigger and bigger turnoff to independence. Like one of the things that I liked about Trump in the beginning when he was doing well, and I was kind of excited to see how that election would turn out, was that he was saying things that I thought independents could get around, and they could overlook some of the negative parts. But now I don't see that happening. And I'm still of the opinion that he will probably, hopefully, not run in 2024. But the problem is how much damage is done for the midterms. So yeah, I saw this really interesting take from, okay, this is two ticks down there. And 27.5 too. On its own, once again. Not quite sure where that one's coming from. So it was quite a decline. I'd say driven mostly by the 10-year, although it was only 1,000 lots trading. But I'm not seeing any of the other assets correlated here. So there's a story in the Wall Street Journal claiming that they were... where are you pulling your news from? Okay, so D Lightning, I have a video on this channel about trading the news. It's like the ultimate guide to trading the news, where you can go for some more details. But I have a list that I follow on Twitter, that I read using TweetDeck, and then I also have Financial Juice News Squawk. He's raised a lot of money, but isn't supporting other Republican candidates. He's been particular about who he supports, hasn't he? And a lot of the places where he has supported, it's been people that didn't really do very well, did they? Like, he's winning overall, I believe, but like some of the candidates are kind of like the ones that everybody's like, that's not a very strong candidate, you know? Anyways, the Wall Street Journal was making the argument that the Democrats were doing a bait and switch. They were saying the two main issues for Democrats right now are abortion and Donald Trump. And neither of those two things are on the ballot for the midterms. Like, no matter what happens in the midterms, the Senate will not have enough votes to pass an abortion law, either direction. Right, you would need a 60% majority to pass some sort of an abortion law. So it's just not going to happen. So that's not on the ballot. And Donald Trump isn't up for election or anything like that. Oh, very good. Found you looking for Ninja Script help, so I'll be digging through your videos and following up. Oh, thank you. Thank you very much. I have, if I haven't put the link up yet. I need to put it somewhere. Maybe I should just put it in the video. I'll give it to you here. If you go to that page and sign up for the newsletter, it will send you the free indicators. I have a couple of free indicators, and those might be, so some of those free indicators do some sly things. So they're worth looking at. They're worth looking at. You're getting into Ninja Script. But I tell you what, Lightning, my best video, in my opinion, the two best videos are the inelastic theory of markets and the stylized behavior of markets, proven market behaviors. Those are the two best videos on the channel. They're all good videos. It's when I go back and I look at my library, I'm really like impressed with myself. Like, wow, I have so many good videos that like anybody that's a beginning trader should watch, and I don't understand why it's not more popular among newbies. I think that maybe some people just think that it's too advanced for them, but I'm trying to get you to the point where like you stand, okay, what's this? So they fell back there really quickly. So what price were they at? I think that we were looking at 70, right? 70. So they came back a basis point. I'm still worried about taking a trade. But in this instance, it looks like they fell back through the liquidity hole again. No. In fact, I'd say that you're getting an opposing meta order here. Yeah, it's a meta order to the sell. I'm not seeing any correlation with it in currencies. We are seeing equity indexes kind of turn around. You can see Ford is pulling out a pretty good turnaround. I don't know, that cumulative delta in the end was positive. Was that a good sign that we were going to turn around? I don't know. In Ford, yeah, that drop in ZN was awfully fast, wasn't it? And like, do you see the orders come in between 27 and 26? It was just, geez. Somebody dumped 5,000 contracts all at once. I mean, I don't like that they're doing it just back into 26, but it's really curious to me, the messaging that I'm seeing from the financial news today, because before all of this, like I made a video about it yesterday, basically making fun of how there was so many influencers that were predicting a pivot in the Fed. And now the news is, yep, they're going to raise rates and they're going to keep them there for a long time and it's going to suck. Right? And I'm seeing that from like all of the news. So here's Yahoo Finance. The Fed acknowledged for a while this will be a bumpy ride as they continue to bring inflation down. Senior international economist Andrew Patterson says tomorrow we expect them to really emphasize how long they're going to keep rates at that terminal rate. Yeah, that is, I think, going to be the key tomorrow. Man. I wonder if that selling down to 26 was just a trader that had absorbed and taken a really big long and was dumping it or something. Dumping it for break even or something. Or maybe a little profit. Because that really did come back. Really did come back. You know what? When I look at my camera here, I just don't like the... Do I have any LUTs turned on or anything? Yeah, we'll do that. It's just a little bit low on the contrast. So... turn the contrast back on. A LUT. I turned on a LUT to increase the contrast. And that looks much, much better. So there's this guy, his Twitter handle is long Tplex trader, Lebanon. And I think he's been tweeting out there on the treasuries about as long as I've been trading. He really loves the auctions. So he says 20-year bond auction today that has license to steal money written all over it. I sense even more traps being laid, CBF and friends. Like they fall back down again though. And the 30-year at its lows. If they were to push lower in ZV, that's a lot of cumulative delta to that's a big divergence in cumulative delta. We probably already talked about this, but where did you learn all of this? Oh, various places. So I think what I was saying before you came in to somebody else is that for macroeconomics and stuff, the best way to learn is to read the news. So I read a lot of financial news. I have a Bloomberg subscription. I wish there was a Wall Street Journal one, but I'm stuck with Bloomberg for another year. And I read CNBC and I read Zero Hedge a lot. Zero Hedge in particular will post notes from prominent Wall Street analysts, especially anything like the Goldman Sachs flow traders. Those are my boys. Those are the people that I listen to. The Goldman flow traders say they were expecting X amount of buying in the S&P 500, and that's more than people are anticipating and isn't being priced in. I'm going long. So those guys are good at what they do. So when you read all of that stuff constantly every day, you'll learn a lot about macroeconomics. And I think that that's more pertinent to what's going on today than what you might learn in a book. Okay. The first trading course that I took was the No BS day trading. That was really good. But the stuff that I am teaching you guys about order flow, stylized behavior of markets, both of those two videos that I say are the best videos on my channel are based on studies. Like in the video, I tell you, I show you the study, so you can go and find it and read it yourself. But reading that kind of research can be really, really difficult. So there is a book that if you really want to get into market microstructure that I would recommend. It's called Trades, Quotes, and Prices, Markets Under the Microscope, Financial Markets Under the Microscope by Jean-Philippe Bouchot. And Jean-Philippe Bouchot is the co-founder of Capital Fund Management, which is basically the top CTA in the world. Okay, so this guy knows his shit. He is a serious quant. And his book basically summarizes 30 years worth of market microstructure research and tells you, it gives you a base foundation for basically everything that we know about market microstructure. And that's where I get the backing evidence for this, like things like liquidity holes and stuff. Okay. Another thing was that I did work for a bank, and I kind of watched the block traders. I only got to talk to them like very rarely, like once or twice, but I was able to see the moves that people were making because they were coming through my systems, and I could kind of see how they were doing it. And then I read that with market microstructure, and that's kind of where I get all this stuff from. Like, you know, you want to wait for 45 minutes and all of that. Like, when I say it, it kind of seems silly, doesn't it? And then you watch it and you're like, oh, holy shit, he's right. How is that not known? I don't know. Because the block traders definitely do it that way, but retail traders just don't know anything about how they trade, so they don't know to look for it, I guess. Of course, if too many people found out, they probably would adjust, right? Probably would adjust to doing it more often, which I guess would be kind of good for traders, but... So that's where I get it all. But I try and make videos for all of the really important stuff. And like I said, I do want to make a book to really dive deep into things, you know, because I kind of give you just enough to like kind of know generally what's going on and maybe where to go and look to get more detail. But there's really not like there's really not one single good source, you know? Like, especially this whole thing about, well, because what retail traders do is they come in and they think, okay, I just need to learn this one thing, and then that one thing is what I'll make money from, right? They have the idea of the Holy Grail in their head. I'm going to find this pattern in the charts, or if they don't believe in charts, then they say, I'm going to find this pattern in the order flow, and then I'm just always going to trade that one pattern, and that's how I'm going to make money. And the reality is that markets are more complicated than that, unfortunately, right? And so order flow is useful, but it's only part of a complete breakfast. And you kind of need all of these different parts, and they're all kind of very varied. And many of these parts that are really important to have, like retail traders don't think about at all. Like, how many retail traders do you know look at yield curve spreads? How many retail traders do you know keep a close eye on the dollar index as they're trading? And then order flow on top of that, and fundamentals on top of that, because a lot of retail traders don't even read the news. Right? They don't have a news squawk. Right? So there's like 3 out of the 4 or 5 components of a successful strategy that you need. Half of it they don't even have. And if I could make a book that, because what I'm finding is that you know, they don't, otherwise people don't get it, right? If I make a book, then I can come in and I can say, you want to trade? This is where you should start. This is the Day Trader's Handbook, and it will tell you everything that you need to know. Doesn't guarantee, you're still going to have to do some work on your own, but it's going to give you the base knowledge that you need to even stand a chance at figuring this thing out, right? Then I think we'd get there, because when with like individual videos, you know, people don't get to see the full picture. Plus, if we made a book, we'd be able to, you know, that would be some income that we would be able to use to really, really up the quality of the content on this channel, right? Like, I would really like to do more serious articles about current macroeconomics, but that stuff is really hard. That takes a lot of research and stuff to write a really solid, you know, with no holes in it. You know, I can kind of just yap here on stream and discuss this specific issue, but if I'm gonna make a video about it, like, I have to be thorough about it, right? So I would really like to have the income to justify spending more time on the videos. And if we had a book, it would help that, right? But for those of you guys that come here in the stream and you're serious, right? The videos on my channel have everything that you need. And then you come here and you talk with us, right? I don't want you to shadow my trades or anything like that. If you think that it's a buy day instead of a sell day, then you come in and you buy it, right? And you do what you want. But we're kind of working together, right? And so we can kind of fill in the knowledge gaps. And I can come in here, you can ask a question, and I can be like, oh, okay, so here's the thing that they don't understand yet, and we can teach it, right? You can write a book on why price action is used. That's definitely going to be like the next video, I think. I might make a video on my jigsaw workspace first, but they're blowing below some big biz, says D. Well, what I'm noticing right now in the treasuries is that they are starting to hang out at the lower end of this range again, although it's really unclear to me how this flow is actually going to turn out in the end. I am a little concerned that before we leave here that the treasuries go for another leg lower and that the equities freak out about it. Like, look at Ford. Ford had a little bit of a pullback. They've come back to like 13.7 and now it's kind of flattening out again, right? So that, you know, that could be what it takes for them to turn back down, and could be a really ugly downturn if they push lower. Yeah, because some people look at this as support, I think, and so they're getting slammed. Yeah, although I'm not, like, the thing that has me weirded out about it was that it was really, really strong volume when we made that pullback. It was pretty decent volume, but to the downside to bring us back here, although it happened all very, very quickly. And now since that time, the volume has slowed back to a trickle, but it is pressuring the downside. So I think that if it does go to the downside, it's going to kind of be one of those, like, you know, longs giving up, capitulating sort of a thing, you know, longs capitulate, stop, run lower. which doesn't give me enough confidence to like try and like say sell into 24 as it breaks. That one, you know, you might, maybe if you're going for a tick or two, but I'm a little skeptical about if it does break lower, how much lower they'd be able to actually get. And like I said, the flows are still being a little bit sketchy. So it's very possible. It's just as possible as any other scenario, at least, that another buy flow comes in here and takes us all the way up to 114, even in the 10-year. 945, there's an aggregate seller that got observed and they just blew through it. Oh, I didn't oh, wait, which instrument are you talking about with that one? In ZN? What are you getting 945? That's not that's no number that you show on the treasury. Get your numbers straight. Oh, at 9:45 a.m. Oh, okay. Sure. Yeah, when there was the big trades down here. The trades that happened at 26 and now they're below that. That's true, yes. Although I would say if it's been longer than 45 minutes, it's pretty questionable if it matters anymore. Right? After about 45 minutes, you should expect the liquidity conditions to be different enough that I wouldn't be looking at like you know what I mean? The bigger thing that I see here is that the 30-year continues to buy. I'm really, to be honest with you, I'm really tempted to come into the micro yields and sell 3.585. No joke. Because this flow in the 30-year is really kind of countering what I think that people are getting surprised. Like, I think that all of the sell today was a little bit too obvious, right? And I think that people are going to get taken by surprise by this 20-year auction. So it might 3.585. Well, look at the S&P 500 breaking lower there again. I don't think that I have enough to make a trade off of there, but that's just kind of my gut feeling at the moment. That break in ES though could change things. Well, I think we could see a stop run lower here. Maybe I need to do the opposite of what I just said. No, so the issue that I see at the moment is that I might, again, remember I was saying I don't know if I have enough to just sell into 24 if it touches that, right? Well, the issue is that you're seeing buying in the 30-year, and it looks like they're trying to flatten the yield curve out again. So if that's the case, then we shouldn't expect the micro 10-year and 30-year to move as much. So even though there might be a break lower, you might only be able to get 5-10 ticks out of it in the micro 10. So that's part of why I'm not all so gung-ho about taking a trade here, because I don't think that the reward is worth it in this situation. Okay, so there was some traded there at 24.5. Seeing a lot trade at the low like that quickly is not a good sign. So I'll do it with a sim here for a tick. Because they did break, like, they didn't just break lows, they broke it with volume, man. Like, the sellers were like, ah, yeah, you gonna give me 3,000, 5,000, 6,000? All right. As Japanese yen is turning back down at the moment too. I should have taken 3.59. So this is just like a really good example of where you have to be a little bit cautious about trying to just trade cumulative delta, right? Because the 30 year is pushing lows here. If they extend lower now, it could be really ugly in the 30 year because of that, right? I think we might be coming up on some more significant support levels, yeah? Well, no, we're so low that there's not really anything below us to catch it. Like, we have to go all the way back to like 20. Oh man, how far back do we have to go? I don't see levels this low until 2014. Yeah. Oh geez. Hmm. Does the repo market affect treasury price? So, it can, sure. I mean, I think you're going to find the rates markets kind of all move together. But there has been, at least, I mean, when we had the repo crisis back in 2018, that definitely affected interest rates, and I made a couple of good trades off of that. Do you think considering volatility? Yes. Oh, yes. So we're talking about in empirical stylized behavior of markets. Volatility is one. It is very well established and proven that volatility clusters, right? That was a really aggressive sell, wasn't it? D's like, wow, yeah, they just rushed through that. Well, a move like that kind of suggests a pullback, unfortunately, but wow, it's not backing off. Oh, that's weird. Anyways, so using measures of volatility to try and predict how far it may go during a given day is extremely useful. And using past volatility during like similar economic releases is really useful. What we're doing here in when we're watching the liquidity, it has an follow through, like the end result that you see in the market is how much volatility there is. Look at that. This is just happening too fast. On your indicators, which one are you talking about? Or are you talking about on my resting orders in the 10-year? Yeah, well, like, look at the liquidity has thickened up substantially with this move lower. So like look at the downside. 3K, 24, 24, 28, 37, then 22. Like the bids are really strong. The offers are still about what we've been for the markets, 2,000, 1,800 to 2,000. A little unusual, huh? I think Pelosi is shorting ZN, I don't know. So I wish that I was involved in this, but why did I not get involved? Because I was seeing that really strong buying coming into the 30-year. Now, that was probably because of flattening, right? But we saw a period where there was strong buying coming into the 10-year as well. The 6J has kind of been a little bit disconnected. I mean, it did move lower when it mattered, but it's been a little bit disconnected. So now it wasn't because I was talking, right? Like, you saw that before the move happened, I was kind of like sitting there contemplating a reversal, right? So the flow is not 100% in line with what I would expect for a move like that. That's why I stayed out. But now that it's done this, I have some real questions about what the 20-year auction is going to be like today. Yeah. Could be ugly. Man. This is going to reverse. Well, I wouldn't be surprised to see it move back up to 26, but with the way that the liquidity is going, okay, so we got to put ourselves in the mind of the block seller. So I'm a block seller and say I have to sell 60,000 contracts, okay? I have to sell 60,000 contracts. What am I thinking right now? I'm thinking there's a lot of liquidity to sell into. I can probably keep pushing, right? And the thing is that there's been counter flow. Like the volume, the market orders have not been all to the downside. That's why when I go and I look at my metrics and I see, okay, 10-year cumulative delta, flat, 30-year positive, 5-year flat, okay, yields flattening. So that might explain why there's buying in the 30. Then I look at Japanese yen not hitting new lows. Equity index is not hitting new lows. Gold not hitting new lows. I can't see why it's doing that. It's just there's market orders coming in. That gives me a very difficult situation to predict those orders, other than to just say that people are going to sell because of the CPI numbers today, right? So is that a good enough setup, especially when the curve is kind of going against us? Well, it's not enough, only if I catch a really good spot, right? So the way to have traded this was to have just really had confidence in that they were going to continue to sell all day and have been selling at 29 was really the way to do this. They're at 22.5. Well, everything below 24 really, it probably continues, but I don't feel that I have a very good ability to predict it at the moment. Look at that. Okay, so there's a big stack at 22 is a little suspicious. Yeah. Oh, this could get really interesting, because I think that somebody was looking to buy here in this area as it pushed lower, and I think that they just caught it. So now does it shove through them? It is, they are not just like, okay, so this is a very different market from what we're used to seeing, especially on the downside, because usually what you see on the downside is like orders just kind of jump out of the way. This is doing what you're more likely to see when we're having an up move, is like really strong market orders hitting into the highs of the day, right? And just pushing through, and like you'll see big absorption and it keeps pushing through anyways. That's what we're getting right now. And even though the liquidity has increased here on the bid side, they're still pushing through it. Lots of liquidity and they still get through it. Although if I had taken it, so like before that move, I could have taken 3.6. I'm not getting paid for that one, right? So you see what I mean? Like the 10-year was like, wow, but what the 30-year, it's actually meh. And as a result, micro 10-year kind of meh. I don't know. $10 on micro 10s shouldn't be considered bad, but it's just that we've been getting like 40s and 50s lately, right? I guess if we had come back down here when we were at 6, we would have been getting pretty good. Would have made $40. That's 2 ticks up. How long had it been at 23? Well, it was there for about 5 minutes. That, I don't know. The way that order flow came in looked like panic to me, yeah? Can you believe, where was it that I took where I was like, well, I can definitely get at least one tick. Oh, it was at 24. Oh, man. Well, let's see how strong this backflow is. The liquidity behind us is very, very damaged for sure. Getting news squawks pointing out that Bitcoin is below 1900, but it's actually turning to the upside here. Okay, so here's the other weird thing, is that the treasury is pushed lower there, but it's not really affecting the equity indexes. And in fact, what may have been part of the driver was oil starting a little bit of a rally again. Oil starting a little bit of a rally. It's rallying with the equity indexes, I think. Ford is still stuck in the mud. Who are they going to sell to? Well, this is again, right? Meta order. So I don't think that this meta order. So like anytime that we think about a large number of lots hitting the market for the same reason, we can consider that a meta order, right? But there's a difference between like a meta order and like Goldman Sachs executing a block trade, right? So that push to new lows did not look to me like a large institution tactically executing a block sell trade. That was like panic and stops. It may have been like a margin call of some sort, right? Margin call of some sort. So if we say that they're out now, they puked it all, now we're getting the post meta order impact, which because we had such it came through from 23 so quickly, it comes back there very quickly. And if we see profit taking, it could very easily take us back to 26. So I still see a market where it's kind of difficult to, right? It's kind of difficult to get on board with it when it's going, and it's kind of difficult to want to take it on the pullback short again. Because I mean, from a price perspective, 23 is probably not bad, right? But then I go and I look at the volume and I'm like, yeah, this could rocket back up in their face really hard. It may end up the day down, but there's possibility of a sharp pullback for sure. It's kind of like perfect circumstances for that kind of a mess. Let's see here. Who's Isabella Lee? I've never heard of this person. For Wednesday, 75 basis points is largely priced in. For those in the 100 basis point camp, some stats from CFRA: since World War II, the Fed hiked by 100 basis points only 7 times. After those hikes, the S&P 500 slipped 4 out of the 7 over 1, 3, and 6 month periods, posting an average return of negative 2.4%, negative 1.3%, and 0.1% respectively. Who's going to buy stocks with 2s paying 4%? That is a good question. I mean, I don't know if 4% is that great, really. But in the current environment, yeah, why not? Why not? Right? Because in the current environment, it's like either get 4% or lose money in stocks. Although, to be honest with you, stocks aren't doing horrible. We're not below 38.50. We're not below 38.50, just saying. And you know what? I wouldn't be surprised. Oh, I really shouldn't say this. Okay, so like, I think that there's 2 scenarios from tomorrow's Fed. I think one is, they do 75 basis points and the market actually kind of sees that as a relief. And then Chairman Powell, does his usual thing and does his best to avoid saying anything significant. And so the market misinterprets the whole thing as bullish, just like they did last time around. The other scenario is that he spends a lot of time talking about how we're going to keep interest rates where they are for like a year or 2, and the stocks puke lower. But at the moment, I have to say that the equity indexes have been taking this latest increase in interest rates quite well, actually. Like, we're not to the lows of the year yet. And that's, I would have thought that we would have gotten there already, really quickly. So I'm not saying that it's a buy or anything. I'm just saying they are holding up a little bit better than I thought. I think my allergies are acting up today a little bit. I can just kind of tell it with the mucus in the back of my throat. Like, pollen count's higher today. Not sure what it is that's going off right now, but I don't like it. I can kind of like taste it. Can taste the pollen in the air. Become hypersensitive to it. Also, what's going on here? Are we steepening back out again? Oh, now this is just getting weird. Now this is just getting weird. Are we going to steepen back out? News Squawk says, our clients heard our squawk that Russia suspended oil exports via the southern leg of the Druzhba pipeline amid transport payment issues. Look at that jump in the chart. Try hearing the news for the first 7 days free, blah, blah, blah. Oh, that's Brent crude. I was like, those prices don't make sense. Wow. Oil moved to 84. Now they're chilling out. It's a pretty good pullback in the 10-year. I'm still weary about this, man. So I'm gonna have to say that for me, not very good trading. I think that we understood the market very well. I think that we understood the liquidity very well. You could see we were picking out the liquidity holes and the timing of things really, really well. But when the time came, I did not have the confidence to take a trade. And so I'm going to say bad calls from me. Well, I don't say like bad calls, but I wasn't really fully in line with the market. You know, I can read the liquidity, but I was wrong about what the market orders were going to be per se, right? But I still see kind of hints that there could be some contradicting order flow come in here. So I think that it's wise to have some caution here still. Certainly has been sell big. Well, like when I come back to this daily ZN, this latest move was from what? 122 to 114. So 8,000. You just hold it. Looks like a pretty consistent trend, although they're starting to maybe get a little too aggressive here today. And again, at the lows, the liquidity did not pull out of the way. The liquidity was very much absorbing. So we've really got to be careful about like short covering. Especially, they haven't gotten there yet, but especially if we get back into the 26 area, right? But it's time for me to go. So catch you tomorrow. We'll have the non-farms, so don't miss it tomorrow. In the meantime, stay excellent, friends. Stay excellent, team. Stay excellent.